the 2019 DEB mock incomplete B, and there's a few things, interesting things thrown in. First thing I'm going to look for now, I've done a few of these questions, is there bank at the bottom? And if there isn't bank at the bottom, that means I will have to do my bank working from incomplete A's at the end. So just be aware of that. A couple of other things. There is bad debt provision and there's depreciation. So just take those into account. There doesn't seem to be too much else too exciting in it, but I haven't done this yet, so we'll give it a go. So first thing I'm going to do, he lodged 875 into the bank account, so that's his capital. So where we've got our capital first and first, just capital and reserves, and its capital first to the first is 875,000. Now, given that I know I'm going to have to do my bank working, I'm going to open that bank working here. Okay, I'm going to, anytime I see money lodged and money spent out of the bank account, I'm going to put them in. So I've got my bank account. I've got a bank account of 875,000. So that money is lodged, so I'm going to put that in there. So that's my capital on the first to the first. And he spent 825,000, so that's the new business. I'm going to put 825,000 in there. So I'm just going to leave space for that as I go. So just be aware of that, right? So my first working then is going to be my goodwill working. So after, by the way, I've put in everything from the bottom. So we're going to put in our stocks. So we've got stock of 53.6, but it includes stock of oil of 1400, so that's 52.2, and then stock of oil 1400 brings you up to your 53.6. I'll put in that 52.2 then in my closing stock down here. Okay, so that's my stocks. Debtors 61.5. Now, because I've already had a quick look through this, I see that he wants to set up bad debt provision. So I'm going to put in that BDP now. It's 3%. So 3% of 61.5 is 1845. And that's going to be 59,655. And I'm going to put in that increase in bad debt provision of 1845. Okay, so that's that one done. Okay, so I've gotten rid of a few of the problems that might show up straight away, just by doing it that way. My trade creditor is 46.4. I can get them in, and then my electricity due, that's also a liability, and it's 900. So we've got everything in. Okay, from the bottom. So we can go back up and do our goodwill working now. So our goodwill, it's what we paid for the business. Just bring it down a little bit further, actually. So we paid 825,000 for the business. What's it worth? So its value is whatever it's worth. So that's its assets minus its liabilities. So it's got the following assets and liabilities. It's got 540,000. It's got equipment of 122. They're both assets. We've got stock of 45.5. That's an asset. Debtors 53.3. 3 months rates prepaid. That's an asset as well. Investments are an asset. Creditors are liability. And wages due are liability. So assuming I've written everything in correctly and I use my calculator correctly, I would suggest for all these big sums, check them twice. We'll take one away from the other, and we get a goodwill of 36,000. So now it's already telling me I've got that goodwill wrong. So 825, let me just check. So 540 plus 122 plus 45.5, 53.3, 36.7. See, I put that in as a plus there. So that gives me 49.2. So even though I said wages due was a minus, I put it in as a plus. So 49.2 is my goodwill. Okay, stupid mistake. All right, so once we're there, we'll get on with starting from the top and working our way down. So first one we have is premises. And premises is 540, but you're always going to buy a building in these. So it's 540 plus 280. So he bought a premises costing 280, which is 820. Go down and see if there's depreciation on it. So there's no depreciation on those. So that 820 is the value of the business as well, or the value of the premises as well. Next one is equipment. So a couple of things to look out for. Did he buy any more equipment? So equipment started off as 122. Was there any trade in or any purchase of equipment? We'll have a look down in the payments here. Yeah, there is. There's 122 and another 12. So it goes up to 134. Now, we know then there's going to be depreciation on it because it gives us dates. So down here, it says there's 15% per annum on equipment depreciation. So that's 15% of the initial equipment figure of 122. And you had that equipment for the first 9 months of the year because you bought the new equipment on the 1st and the 10th. So you had the remaining 134, or the total 134, for 3 months, 10, 11, and 12. So that's 13,725. And 5025. So your depreciation of equipment is the two of those added together, which is 18,750. Now you're assuming there's no depreciation to date, which of course there isn't, because it will be given at the top if there was. So 18,750 goes in there, and then 18,750 is depreciation of equipment here. Okay, so that's those two in. Okay, so then you're on to your stock, 45.5, that's your opening stock. Now debtors is normally in incomplete A's tells us to do sales, but because sales is going to be one of our final answers, we don't do anything with debtors. So the next one after that is our rates prepaid. So we go to our rates. So rates is a payment. So it gives us the payment for 12 months, which is 15.6. So if that's for 12 months and there's a prepaid for 3 months at the start of the year, so that prepaid is for this year. So we add that 3 months on, and it's for 3,600. If it's prepaid at the start of the year, it means your rates run from April to April. So there has to be a prepaid at the end of the year. And the prepaid at the end of the year will also be 3 months. And it will be 3/12 of the 15.6. which is 39. Now, put that 39 in straight away into your assets because that's one you can forget. So rates prepaid at the end of the year is an asset. Any expense prepaid at the end of the year is an asset. So that gives you the 15.3 as your expense. It's a good idea to go down then and check and see if there's any drawings on it. There's no drawings on it, so that 15.3 can go in as your expense straight away. It's unlikely there'll be drawings on rates, but I have seen it. There shouldn't be, but I have seen it. 4% investments. So we've got investments. Now I know there's another fixed asset coming here somewhere, isn't there? There's a vehicle, so I'm going to just skip a line. Again, I would suggest when you're doing these in your leaving cert, go as far as creditors amount falling due within. So go as far as finance buy in reality on one page and do your finance buy on the top of the other page. Just give yourself as much room as possible. Anyway, investments. There are 4% investments. So the 4% investments are 70,000, which means we've got 2,800 investment income. So 4% of 70,000 is 2,800. Okay, anytime you've got investment income, you've got investment income due, which is going to be the 2,800 minus whatever we've received, which is 2,100. So that's 700. So I'll actually do it here. So your investment income is 4% of 70,000, which is 2,800. And then investment income due is 2,800 minus whatever you've paid or you've received, which is 2,100. That gives you a due of 700. So that investment income due needs to go into your assets. Okay, so that's our investments, our investment income done, and our investment income due. Creditors would be to do with purchases. Purchases is going to be our final answer. So that's, you don't have to do anything with that. Wages will tie in with general expenses. So wages and general expenses at the moment are going to have to do working on it, right? So wages and general expenses start off as, where are they? 246,800. Now it tells us in the question that there's wages due at the start of the year. So we'll add that due on the 1st of the 1st because it's to do with this year. Or so we'll take that due at the first because it's due last year. So that 6,6 gets taken away. Okay, now see if there's anything else on wages and general expenses. So see, it says the payment for wages and general expenses includes 3,100 petrol bill for his own private use. So that's drawings. So that is 3,100 for his own private use. So the expense then will be 237,100. Now you will see in some of the marking schemes they will include the college fees in those. I never do, and they don't in the leaving cert one, so I keep the college fees separately. You could throw in the college fees if you wanted. Okay, so that's the wages done. The wages due. Now I will start my drawings working because that's my first mention of drawings. So I've got my wages of 3,100 in my drawings working. Okay, during the year, I didn't keep a full set of accounts. Gross profit is 40% of sales. We use that at the end. The drawings then, he took goods from stock to the value of 120 each. So his purchases drawings is 120 by 52. Not 53, 52, which is 6240. And a check for 280 each month. So that's a bank check, all right? So bank drawings is 280 each month, so 280 by 12. Now that is 3360. That is drawings out of our bank account, so we'll take that out of our bank straight away, 3360. Okay, so that's that one done. Now, during the year, he borrowed 300,000, part of which was used to purchase an adjoining premises. So I'm going to put that in. The loan is 300,000, and the premises, he used the loan to buy a premises costing 280 into the bank and out of the bank. So we'll get them in as well. Now we've done the premises one, we haven't done the loan interest. So we'll do the loan interest now. So he's 6% per annum. So it's 6% of the 300,000. He got the loan on the 1st of the 9th. So 9th, 10th, 11th, 12th. So by 4/12 is 6,000. All right. So that's how much he has to pay. We'll take away what he has paid. So he has paid. He has paid. Where are we? Be here somewhere. 4/5, which means he's still due to pay 1,500. Okay, so that's our loan interest due. Okay, now I'm going to put in the loan interest due into my liabilities now, again, because in case I forget it. Now, normally some of the loan is for the private section of the business. So he says 30% of the interest payable is for the private section of the business. So I'm going to find 30% of that. So take the 6,000, find 30% of it. And that's 1,800. And that gives us an expense. The private element is 4,800. So again, I'll put my loan interest here of 1,800. And then I'm going to put in my 4,800 into my expense. Okay, now the loan. So the loan in itself is 300,000. We have to see how he's going to repay it. So in total, the loan is 300,000. And he's repaying it in 24 equal half-yearly installments. So he's paying it over 12 years. And the first payment is within 3 months. So the next payment's within 9 months. So 2 installments fall due within 1 year. So there's going to be a loan installment due. Okay, and the loan installment due will be 1/12 of the loan. So the loan is 300,000. So it's going to be 300,000 divided by 12, divided by 24, multiplied by 2. So 25,000 falls due within 1 year, which means 275,000 falls due after 1 year. So in total, it'll always add up to the 300,000. Okay, so that's the loan done. Now, during the year, he lodged to the bank account these 4 things. I'm going to put the 4 of those into my bank account. Okay, 2, 1, and 4, 8. And then I'm going to see what they're for. Okay, so the 305, that's from the cash register, that's known as a contra entry. The 12,000 is capital introduced, that's an EU grant. So capital introduced, or the EU grant, 12,000 will go in. The investment income we use to work out the investment income due, so we've dealt with that. And then we've also lodged 4,800 rent for 6 months, ending 28th of the 2nd. So that's new, right? But it's not really new. That's rent received. Okay, and I'll do a working on it. So we've rent received 4,800 for 6 months up until the 28th of the 2nd. So 4,800 for 6 months up to the 28th of the 2nd. So this year's income is 4 months of that. because next year's prepaid is 2 months. So it's telling us it's 2 months. So basically, we're going to take that 4,600, divide by 6, and multiply by 4. So it's 4,800. You have, I got the right numbers. So that's 3,200 and 1,600. So the 3,200 is income. So we'll put that in. And then rent received prepaid is a liability. I've run out of room. So going back to what I said about spacing our stuff out well. So rent received prepaid is 1,600. So you owe that money back to the person renting off you, or you owe them rent, one or the other, or you owe them use of the building. So that's why it's prepaid. Okay, that's new. It's not too difficult. Again, you'll have seen that in loads of questions. Question ones, certainly in service firms, you'd see it. You'd see it in a few of them. So anyway, they're all dealt with. We've lodged them all, so we've put them in our bank account as lodgements. He made the following payments: light and heat. I'm not sure if we've done the light and heat working. We haven't. So there'll be a light and heat working, so we'll do that. Just change that to, sorry. So the light and heat started off as 18,400. Now, is there any light and heat at the start due? There's not. There's no stock of oil or anything, but then at the bottom there is. So there's the stock of oil, which we know we're going to take away. So the stock of oil gets taken away at 1,400. And then we know we have to add on any electricity due of 900. So that'll give us light and heat used of 17,900. Is there any drawings in that? More than likely is. So it's 30%. So 30% of the light and heat used. So less drawings, and it's 30% of that. And that'll give you your light and heat expense figure. And again, I'll just put in my light and heat now. 5370. So, that'll give us our light and heat expense of 12,530. Okay. All right, so that's 12,530 in there. So that's light and heat. Interest we've done. Equipment we've done. Wages and general expenses we've done. The delivery vans, again, purchased on the 1st of the 6th. We have it for 7 months and it cost 45,000. So we hadn't had delivery vans yet. So we'll put them in. There is going to be depreciation on them. So depreciation on delivery vans, we know it is 20% per annum. So it's 20% of the 45,000. Now you got them on the 1st of the 6th, so you have them for 7 months. Just be careful with the months there. 1st of the 7th is 6 months. 1st of the 6th is 7 months. So that's 5250. Okay, again, that's an expense. And it'll go in here as a as your accumulated depreciation. Okay, so that's your delivery van. Rates we've done 15.6. College fees 4.5. College fees an expense. They normally tell us some of the college fees is for a employee and the rest is for a family member. So 60% is for the employee. So I'm not going to do this as a working, I'll just do it here. So 60% of the college fees of the 4-5 is an expense, and then the remaining 40%, so 60% is 2.7, 40% of the college fees is drawings. So 40% is 4-5 is 1,800. The payment for the petrol of 3.1, I've taken that out already. It's for his own private use. Okay, so they're all done. Now I want to put all of those in my payments. So what was my 3360? So what I've done there is, yeah. Now I want to put in all my payments. So we've got 18,400. We've got 4-5, 12,000. They just go in as they are, right? 246,800. 45,000. Rates for the 12 months 15,600. College fees 4-5, and 3. That 3.1 doesn't go in. It says it's included in the figure for wages and general expenses, so it's already in there. Okay, so that's them all. That's those done. So the drawings, light and heat. Let's see if we've got them done. We've the light and heat done. We've the interest done. We've got the college fees done. We've the bad debt provision done. We've the 2 depreciations, and we've everything in. So that should be everything. Hopefully, there's no way knowing if you've got this right until the end, but we'll see how it goes anyway. I might cheat and make sure I've got everything based on what the marking scheme is. So anyway, all right. So we've got our fixed assets first of all. So we'll add them up. Remember, you do your balance sheet first in the type Bs. So that's 975. Now I'm going to, again, if you don't add up the costs and depreciations, you lose a mark. So make sure you do them. You don't use them for anything. And then when you're adding up your fixed assets, it's goodwill plus tangible plus investments. That's 109,4,200. Okay. Then your fixed assets, hopefully have everything in, or sorry, your current assets. I've left out the bank, of course. I spent all that time doing the bank working and I never finished it out. So the bank, add up your debit side. So the thing I told you to be careful of, I didn't do. So the debit side added up to 1,498,900. So we'll write that in, 1,498,900, and then we're going to take away the payments from all of those. I get 43,740 as our bank balance. So that 43,740 goes in your assets. So then if we add up all of our assets, we've got everything in, hopefully 161,950 or 595 even. We'll add up our liabilities. 75,400, which we'll take away from each other. And we get 86,195, which we will add on to the fixed assets. and that's 1180395 as our total net assets. So we take that 1180395 and we make it our capital employed. So that goes in as our answer here. So this is why we'll never know if we're right or not. It'll always balance. 1180395. We're going to take the loan. We're going to say, well, what number? 275 plus 875 plus 12,000 plus the net profit minus the drawings, which again I forgot to put in. Now, you know it's going to be there anyway. You're not you know there's drawings in every question. You've spent a lot of time putting in drawings. So 21,760 on the drawings. So we get that in as a minus, of course. So I've got a different figure for drawings than the American scheme. So I wonder what I've left out. So let me just check it. Sorry about the delay here. That's so stock 6240, cash 3360, wages 5370, 1800, and I left out the college fees. That was the loan interest. So the loan interest was 1800 and the college fees 27. So we definitely wrote that in. So the drawings 24. See, no, that's wrong as well. Where the hell am I going? I've got loan interest in twice. Bloody hell. So 22,570. I put in the wrong figure for college fees, obviously. I wonder, did I take 60% of, yeah. Anyway, so that is 22,570 as a minus. All right, so take your figure 1180375 and you're saying, well, what number do I need to add in to make all of these sums add up to 1180395? So you basically do the opposite. So you take your 1180395, we add on the drawing, so plus 22,570. We're going to take away the other three, so minus 12,000, minus 875, and minus 275. And you'll get a net profit of 40,965, which I hope is right. So 40,965 is our net profit. All right, so it's that number, take away all the other ones except the drawings, add on the drawings. So we take that net profit and we move it over here, 40,965. Okay, we add up all of our expenses, it's 298,275, which I've got a different number than the bloody American scheme again. So just check them. Just bear with me for 1 minute. So increase in bad debt provision. Depreciation of equipment is 18,750. That's right. Rates is 15.3. Loan interest is 4.8. They have 4.2. So did I just transfer that wrong? Yep, 4-8 should have been 4-2. Jeez, I'm on the ball today. So still not the same. Light and heat, 12,530. Depreciation of vehicles, 5,250. And college fees, 2,700. Sorry, 237. So they have a different figure for wages. Let me just see what that is. Apologies. So wages start off 248,600 minus 66. Then had to take away the drawings of 3-1. So 9-7. The college fees was 40. Sorry, lads. The college fees is 40%, not 60%. Oh god. So that's right now. Okay. So really doesn't matter. Just I'm sure you spotted those mistakes yourselves as I was doing them. Anyway, working back up the way, you always do the opposite to what you would do. So it's what number minus 296,775 equals 4,965. So it's basically add the two numbers together and you get 337, 700 or 740. Then you've got your two numbers here, your 32 and your 28. So it's what number added to those will give you 337, 440 or 740. So to find out, you just take them away from each other. And that's 331,740. Okay, that 331,740 tells us is 40% of sales. So we take that 331, divide it by 40 and multiply by 100, and that gives you sales of 829,350. And the difference between the two of those is your cost of sales. Now to find your purchases then, it's the same as over here. You're adding on your minuses and taking away your pluses. So we'll take that, add on 52.2 and take away 45.5. That gives you 504. 310 is your purchases. Okay, the drawings of purchases, which you always have to show here. So the drawings of purchases is 6240. So some number minus 6240, which will be 510, 550 minus the 6240 will give you your purchases. So barring those few silly mistakes I made along the way, lads, it's a tricky enough question actually, but it's not too bad. Just what advice would you give? The advice is always keep bloody books. So make sure you're keeping a full set of accounts. Keep proper analyzed cash book, day books. Keep proper ledger accounts. Provide a double entry bookkeeping system with a trial balance at the end, which would allow you to do a trading profit and loss account and balance sheet. Try not to make assumptions about your accounts, and try not to estimate if at all possible. An accounting concept is basically something that guides the preparation of the accounts. So it's applied. It's a principle that guides the preparation of the accounts. So the accounting concept in stock is that stock is valued at the lower of cost or net realizable value, or the accounting concepts will be prudence concepts. The the prudence one where the going concern concepts, the accruals concepts, those sort of concepts, which I've named. Okay, that's that. As I said, that didn't go as well as planned, but sure, you'll be able to work through and you would spot my mistakes as you're doing them, hopefully. All right, I'll see you later.